Okay, so now we will move on with the remeasurement. So we have learned yesterday about how the lease accounting is going to happen. So before we proceed, yes, we'll have one quick recap. Okay, yesterday we learned theoretically. Now we'll try to draw one mind mapping. Okay, one chart. You can also try that. And I strongly suggest you should try that. Okay, what did we start with? We started with a contract. Contract for what? Financial asset? No, if that is the case, it would have gone to the 109. No, we started with a contract for a non-financial asset. That means we call it, is it identified asset, which is the starting point. Now, what is this contract all about? Did you want to buy it? Is this contract to purchase? It would have moved it to where? PP. No, you didn't buy it, but you got a right to use plus all economic benefits. Then this creates some doubt for me, like how it is possible that without acquiring the asset, you get a control over that asset. Now, first question I'll ask you, okay, is that asset can be substituted? If answer is yes, that means, okay, this must be a normal lease. If the answer is no, it cannot be substituted, yes, then that means this must be a lease contract where I have to recognize the right of assets. This must be an off-balance sheet financing happening to you. Now, what about the protective rights? Protective rights can be there, not an issue. You can continue with that. Protective rights, okay, it's not going to stop you from using the asset. But right to use means what? I'm still not clear. See, right to use means right to decide. Because see, asset gives you different cash flow if it is put to different type of use. It's the same asset, same space. Commercial complex will give you different cash flow, residential cash flow. Okay, you construct a hotel, you put up a classroom, you can put it to different use. In 113, we call it highest and the best use. That is a different concept. Now, question comes, who is going to decide this? Who decides? Are you deciding or are somebody else is deciding? If somebody else is deciding, that means no lease. If you are going to decide it, again you are getting the economic benefits, then it is a lease contract. That means on the commencement date, I need to do two things. What is that? Recognition, measurement. Should I do for all? Should I do it for all? On the commencement date, I should recognize, and after it passes all this test, I should recognize and measure. Should I do it for all? No. There is one exemption given to me. What is that exemption? One, low value item. Second, short term lease. These two items I need not recognize. Now, what do you mean by recognize? Recognize means I should recognize one entry, ROU, to lease liability. At what value it will be measured? For this, first you start with the lease payment. So there are 5 types of lease payments. One is the fixed one, including in substance fixed. Then you have got the variable, which is not based on performance, which is based on the market rate or whatever it is, index. Then you have got the exercise price of the option, termination if you are certain in both the places, and the last is the residual guarantee. If that asset doesn't come to you, you give it back. So you have to recognize lease liability with this, plus if you have made a direct cost which is directly incurred, which you could have avoided, like the commission paid to the sales agent. You paid it because you got this lease contract to draft this contract, because you got it because you got it. Vetting, no. So something which you are not directly related, you expense it out. Otherwise, you have to amortize it. Then anything you paid before commencement, because it is not part of this, minus lease incentives which you received before commencement. After commencement, it would have got adjusted here. Okay, that's clear. This is all about your initial recognition and measurement. Okay, this is just rougher. Okay, I'm also not skilled much in doing this job. But I realized one thing, students, see, big things, make it small. Small thing, make it very small. Very small, if possible, still make it very small. Just have a look, you remember everything. That's you, after, see, that is a, going through a lengthy thing, you have to do it once, not every time. You have to go through your study material, at least after my class, once you read it, enough. Then make a crux points of this, recall it from time to time. Done. There's important questions are there, what all the adjustments are there, like yesterday we have seen that 3% increase, second year they gave you, that's the important question. Understand slippery points there, time to time you refer, finish now. Simple preparation, I don't think so. Should have made more time also. Okay, then one question comes, okay, we are done here. Subsequently, what you do? Subsequently, I have got the financial ROE asset, which is depreciated. On what basis? If I'm going to get the asset, then useful life. No test there. If I'm not going to get the asset, it is earlier of useful life or lease term, whichever is earlier. How do you measure the lease liability? Simple, amortization schedule. Followed, no? See, if everything is, see, if I got a fixed only, my lease is a very simple contract, very simple. That for next 5 years I have to pay 1 lakh rupees every year, finish. Then remeasurement question doesn't come into picture. But my problem is if I fixed on the variable, on day one I fixed, okay, based on inflation index or whatever it is, I estimated. But after 1 year or 2 years, it may change. Initially, I ignored this exercise price. Why? Because I thought I will not exercise. After 2 years, I realized I have to exercise. Termination, residual guarantee. See, except this, all these things are like a variabilities. Only the fixed one is fixed. Just everything is variable. Now, later as we proceed, the moment we get a clarity, then whatever my initial measurement was there, that is wrong. Because that doesn't hold good anymore. My rent is depending upon index. Index got changed. Then old rent, what you will do with that? Now comes the concept of remeasurement. You got a flow? How we are moving? Now what is this remeasurement? Lessee shall remeasure upon a change in the lease payments. Lease payment means 5 elements. Out of that 5 elements, first element is not going to change. On account of any of the change, like my term may get extended. How? How term may get extended? There was an optional, no? You remember yesterday's question only. 10-year term, and there's an option to extend. Initially, I thought, no, I'm not going to acquire. I'm going to acquire it. Suddenly, I will decide, I will not acquire, I will extend. If such type of decisions are going to happen, no? Because original lease liability is done for 10 years. The revised lease liability, you are going to do it for 15 years, right? Or whatever balance. Certainty of purchase, residual validity is going to change. Variability is there, index is going to change. Variability of the payment is resolved and it has become in substance fixed payment. Something was, variability was there and it has become in substance fixed payment. Now, if there is a changes, then I have to remeasure the liability now. If I have to remeasure, should I take the new rate or the original rate? That is the question. You remember in 109, original EIR used to take some time. Sometime you used to take the new rate, whatever is happening. So, if the term is going to change or if the purchase option is going to get exercised, yes, you have to go for the new rate. And if the residual guarantee is going to change, index is going to change, variability becomes in substance fixed payment, yes, you will change with the original rate only. No P&L account on remeasurement. You should not recognize any P&L. There is no, because It is not a modification. Only on the modification part the P&L is going to come. And it is adjusted with the lease liability with the RO asset. I can say simply, when the remeasurement is going to happen, it is like a modification accounting of your Ind AS 109. In modification accounting, what happens? Your old contract will continue. It's not extinguishment accounting. Since the old contract is going to continue, you just adjust. There is no P&L account. But the next we will learn about the modification. In the modification, you may get a P&L account. Modification is like extinguishment accounting. Remeasurement is like modification accounting. There are some changes, but not less than 10%. There, that rule. Here, that rule is not applicable. Here, the question is, okay, was it part of the original contract or is it a new term? Like 10 plus 5, it was part of original contract only. You initially considered 10. After 7 years, you say now, oh, I am going to extend it. No, it is remeasured. Originally, the contract was for 10. After 7th year, you enter into extension contract. You tell, sir, can you extend me? Yes. He say, I will extend it to 15 years. That becomes modification. So somewhere the remeasurement flavor you get in the modification also. Okay, first we will solve some problems on remeasurement. You get a better understanding how to address it. Then we'll go into the modification. You're clear now about remeasurement? Yes, take out question number 8. Now, entity W entered into a contract for a lease of a retail store with entity J. So, entity W is the lessee. On 1st of January 2017, the initial term of the lease is 5 years with the renewal option for further 3 years. The annual payments of the initial term and the renewal term is 1 lakh rupees. That means if you do it right now, you have to pay 1 lakh, 1 lakh, 1 lakh, fixed payment, no variability. Renewal also you have to pay 1 lakh and 1 lakh 10. Okay, if you want to renew, pay 10,000 rupees extra. The annual lease payment will increase based on the annual increase in the CPI. Oh, okay, we got one variable component now. Actually, my base is fixed, but this is going to change depending upon the CPI. Now, at the end of the preceding year, for example, the payment which is due on 1/1/2018 is based on 31st March 2017 CPI. Now, entities W incremental borrowing rate on 1st of January is 5% and 6% respectively at the inception on that 1/1/2017 and 1/1/2020. Now, why that 20 has come? Your contract is for 5 years, no? So, if it is 17, 18, 19, 20, 21, that means something must have happened on 1st April 2020. That's why they give you one more value now. And the CPI at the date of commencement beginning is 120 and on this date 125. So, what must have happened? The variable interest was there, no? The CPI didn't change only. And on this date, the CPI changed. So, your lease rents are also going to change now. At the lease commencement date, entity did not have a significant economic incentive for renewal. So, in the first quarter of 2020, the entity installed one unique lease improvement in the retail store with the 5-year economic life. So, on 2020, what happened? One more important thing happened. Two things happened actually. It is not just your variability changed. See, by this 17, 18, 19, 20. So, in the first quarter of 20, no? So, you finished how many years? 17, 18, 19. 3 years you finished. 2 years was pending. Okay? In the original contract, 2 years is pending. Then you implemented one new machine. That machine's life is 5 years. Now, if you don't renew it for 3 more years, on the 5th year and he'll say, take your machine. What to do with that machine? 3 more life is there, no? What makes sense to me now? You understood the situation? I took a lease for 5 years, 5 plus 3. At the end of third year, I installed one new machine. That machine's life is 5 years. But the lease contract in which the machine is installed, that is only having 2 years. I have to extend it. Because if I don't extend, my investment on the machinery is waste. So this time, previously I was not reasonable certain because at that time investment was not there. Now along with the variability, my term is also going to extend it now. So I am going to get the significant incentive to extend. You are required to remeasure the lease in the first quarter of 2020. That means in the 2020 onwards, whatever changes are going to happen, no? What is that changes? How much lease liability is going to change or ROE asset is going to change? That's what you need to tell. Followed, no? Okay. Before this, I want to ask you only one question. When the lease rent is being paid here, how do you know? They are told, no, here somewhere in the one of the example, they gave us an example. The due on 1st April. That means it's paid at the beginning. Nice question. Please mark it important. Okay, we'll write the solution. Entity is certain to renew and CPI index also changes. This necessitates remeasurement. Because of this, the remeasurement is going to happen. Now tell me, students, how should I proceed? And when what is the question? Question says, how you have to remeasure it? Remeasure means when 2020. Did they ask you on day 1? No. But if I have to do it on 2020, can I do it now? Is my lease liability going to increase or decrease? Increase. How much? That we can't do. So if I have to get there, what I need? Sorry? Without a? Okay. So see, I should do one working notes now. What should be my first working note? Sorry? When? On which day I want a lease liability? Because that is my starting point for every question. No? Which lease liability I wanted? I wanted lease liability on day 1. When? 1st January 2017. Or if I don't have that, how do I know what is my closing balance on say 31st December 2019? So first working note, lease liability on 1/1/2017 on day 1. Now tell me, students, if I have to do this working, what is the first thing I should write here? I will help you. Year. Next column. Okay. CCF or lease payment. Third. PVF at which rate? 5%. Okay, so I say PVCF. So year is 2017 because it's full year, 2018, 2019, 2020, 2021. Because when I started initially on day 1, I never had any idea to extend it. So it was just 5 years. So my lease payment was how much on day 1? 1 lakh. Now if I am going to renew it, it is 1,10,000. What is my second year? Why? CPI is variable, no? But it didn't change. Third year? Third year? Same. Fourth year? Is it going to change? On day one, only you know, your Akka Trikala Brahmanyani, that what's going to happen in the future you'll come to know. No. Could you estimate? No. It's not that previous question that 2% increase is going to happen. It's like that is this rate for this amount. This what it is. In the previous question it was up every year by increase by labor. Followed, no? So fourth year also it is 1 lakh. 1 lakh. I can't estimate now what is the future CPI. I just maintain 1 lakh every year. That when you came to know. That's what I know. Are we Trikala Brahmanyani though? On day one only I can know. That is because one amendment is going to happen now. Remeasurement is going to happen. And coincidentally, two things happened in the same day, same year. One, CPI also got changed. Second, the term also got extended. Here you should appreciate the compassionate, loving nature of the ICI. They could have made it more complicated. How? 1 year the CPI changed. Second year the term gets extended. Then third year I'll bring one more element there. I'm renewing my extension contract or I'm going to buy it. See, these are all concepts which are plug and play. Followed, no? You just mix it. Okay. $120. So on the day when you fixed 1 lakh, it was 120. Now second year didn't change, third year didn't change, fourth year is going to change. It is going to become 125. So this 1 lakh will no more hold good. 1 lakh is going to change when 2020's rate. But that you didn't knew on day one. And this is not a case where like you every year increase in labor plus 2%. Then you would have taken today's labor, added every year. Understood, no? Understood the difference between this and the previous question? Yes. So what is my present value factor? First one. Sorry? We can do it. Annuity factor also we can do it. Not an issue. So what is that? First one? 0.952. Correct, no? Then 0.907. This is what you would have done if you would have taken annuity factor. When is the lease payment? You also written. So my first year factor is 1. That's why I suggest for this problem, don't use the annuity factor. No, again, that risk is there both the places. The risk is here also you made a mistake. That's what I'm asking you. Why? Tell me. If I write 1, no, you will copy 1. I want you to make mistake every point of time and learn from that mistake. See how many mistakes you do. How much perfection is required in yourself, which is customized. Each person is different, distinct. Okay. 0.952, 0.907. Okay, so you multiply all these things. Rest I am not interested actually. After 1 point, no? Understood, no? So you understand, see there are certain catch areas. This is one catch area. This is one catch area. If you cross these two areas, then other things become procedural. And I am suggesting this method because lease is paid at the beginning. If it is the annuity factor, there would have been some mistakes happening. Because, can you tell me what is the annuity factor? You have to take 4 years plus 1 you need to do. It's not simply take 4 years annuity factor. That also becomes a mistake. It's 4 plus 1, which we never used to that type of annuity factor. Understood? And 2 slippery areas. This area I may miss, this area I may miss. Then done. If you are done perfectly, yes, at least 1 or 2 marks you would have scored here. Then, should I pass an entry? No, they didn't ask me. But I know with this what entry I would have passed. What I did now next, I need a lease schedule. So write second lease schedule. Please help me, students. Year 2017, 2018, 2019. Enough. 2021, why do I need it? If you want, you can do it. Because first of all, they didn't ask only, no. Pass the entries, give me the schedule for entire year. Why I am doing this? Because I want that closing balance here to figure out the differential. What is next column? Opening balance 4,54,600. Next, lease payment 1 lakh, net 354,600, interest at the rate of 5%, 17,730, closing balance. This is simple, no students, this format. Because if you follow the traditional, it becomes a little tricky there. This is very simple, okay, no mistakes here. 372, 330, like this you continue and just get me the third year balance 1,95,244. If everything was fine, I would have continued 2 more years. The lease liability would have got finished. Asset also would have got finished because I'm not going to take this asset back to me. So depreciation life would have been 3 years, 5 years, and ROU assets also would have got reduced. So I got my lease liability balance at the end of third year. Yes, students, you can pause the video and complete this. Yes, students. So we'll proceed further. Here there is that's what the format itself is. Once you clear the format, what should I do next? You got this balance. What is your asset ROE asset balance? So we'll go to the third one, ROU asset balance. So ROU balance is equal to 4,54,600 opening balance minus 454,600 divided by 5 into 3. 3 years finished. So this gives you 1,81,840. So you understood the balance of the ROU asset, balance of the lease liability. Clear? Yes. Just keep it. It's like onion you have chopped, tomato you have chopped, keep it side. Now let us come to the main dish preparation. Because this is needed only for my subsequent accounting now to decide what happened. Now what happened? Now let us say calculation of revised lease liability. Now I need that remeasurement, which is at the beginning of the 4th year. We need present value of lease payment as on 2020 using new discount rate 6%. Why? Because the term got extended. The lease rent is based on CPI. The increase, now it has increased. Can you tell me how much percentage I should increase now rent? Otherwise, what would I have done? I would have taken 1 lakh, 1 lakh, 1 lakh 10, 1 lakh 10, 1 lakh 10. See, out of 5, 3 year lease paid, 2 year pending, plus 3 more year I am going to extend. For 2 year, this is my rent. 3 year, 1 lakh 10 is the rent. I would have taken the present value at 6%. I would have said that is my revised lease liability. How much I have already recognized? Balance 1 lakh 95. Differential I would have passed one accounting entry. Followed, no? This is what I would have done. But my problem is This is not 1 lakh, 1 lakh, because at the same time that when I opted for extension, my lease rent also changed because of the CPI. Can you tell me by how much percentage increase it's going to change? 4.167%. So increase percentage increase is equal to 125 minus 120 divided by 120 is equal to 4.167%. So your lease rent is going to increase by 4.167. Clear? Yes. Now we will have the for calculation of lease liability. In fact, we have already given the heading. We can just continue. Below this only, I cannot require, Baba, because already we have given one heading, no? Calculation of the revised lease liability. So what should be my heading? Year. Which is my year now? 2020, 21, 22, 23, 24. 2 year pending of the old and this. What is my next heading? This is what I am trying to do here. I am trying to figure out the present value of the lease payment. So CCF or lease payment. What is my 2020's lease payment? See, now there is a little confusion. It's a first quarter. Then somebody can already argue with me, sir, when it changed first quarter, no. That means your lease rent is already paid, no. The lease rent which is due first depends upon the previous 31st December 2019. That is done. So you have to apply this. That means first year lease rent is already 1 lakh. And then other. No, somebody can, okay, that's also fine. Somebody can say, see, what you paid advance is for the entire year. If entire year somewhere it's going to change, okay, then you have to apply it previously, whatever. So in the institute has taken the assumption, even though first quarter of 2020 happened, it is applicable from the beginning of the year, because rent is, whatever rent you pay, no, you just pay at the beginning, meant for entire year. So assumption here is, if any point of time the CPI is going to change, it becomes applicable from the beginning of. So what is my first year rent? 2020's rent? 1,04,167. Can you tell me second year rent? Yes. Yes, how much? Second year means 2021. 1,14,000. Yes, what about others? How much? 1,14,000. Others. That's what I marked here, no? The gray area, slippery area. One lakh 14. 1 lakh, huh? Okay, so supporter for you. Okay. 1,08,000. Okay. Okay. So it is 1,04,167. 2020's rent. Okay. I was just explaining, no. CPI got changed. When the CPI got changed? Say, they gave an example and they said that 1/1/2020, the CPI got changed to 125. So the first 2020's rent, what you pay on 1/1/2020, that fourth year's rent, it should be based on the new CPI. Then these two are as per the old terms, for which the base was 1 lakh. So second year also 1,04,000, no. What is my third year? And now comes 1 lakh. How much? 14,583. Understood? Now how did you get 1,14,583? It is 1,10,000 into 4.167 percentage plus 1,10,000, or 1,10,000 into 1.0467, or 4.17%. What is next? Nice question, no? So many slippery areas. Now, what is my present value factor? Why? Why not 5%? Because term got extended. So again, it is a mixture. Somebody can argue, sir, my CPI also got changed. CPI I should have used the original rate. Then that becomes more complicated actually. You bifurcate now two elements there. One change because of the term, one change because of this. Okay, Institute said don't get into all this thing. So 1, 0.943, 0.890, 0.840. Yes, next everything is the procedural. Just leave some space and write 4,91,376. Follow? Yes. Next, we need to make an adjustment, because we have to ready to pass the journal entry. We have everything done now. Like final third is pending. Everything mixed done. So adjustment to lease liability, because you need to pass an entry, no? Revised lease. Yes. You have any doubt, Vidya? You have any doubt? $1,14,000. Yeah, this is only for 2 years, because base was 1 lakh for you. Then after this, for the next year, the base become 1,10,000 automatically, because the moment you go opt for renewal, it's 1,10,000. But already one term was telling you, whatever rent you pay, it should be based on the CPI. So CPI was 4% up. So you will add this. 2020. 19. So this is that 2019 based payment. 20. 2019. Have they told you? If at all, they would have told you on 31st December 2020, the CPI was so and so. Then this amount also would have got changed. You would have equated same thing. When I started, it was 120. On 31st December 2022, so and so. So what is this? And from then on, that same percentage will remain. Okay. First of all, is it 4% is getting added every year, or it will change only on based on the CPI? It will change based on the CPI. Now, what was your original CPI? 120. This was when you fixed 1 lakh rupees. Now, CPI didn't change. Why I should change the, see, what is, first of all, what is the logic behind, what is the concept of a CPI? What is the concept of a CPI? What is CPI? That we should understand, no? Then we'll appreciate this better. Why they included that clause? CPI is Consumer Price Index. It is an inflation factor. Now, look, Baba, you pay me 1 lakh based, because today's index inflation is 120. Now, tomorrow also you pay me 1 lakh, and if the inflation is increasing, 1 lakh is not, I'm a vendor, see, I'm an old guy, okay, I don't have any property. My only property is one property which I'm giving to you. Now, tomorrow, if the inflation is going to increase, my medicine costs are going to increase. So then, if you continue to pay me 1 lakh rupees, either I should eat less of medicine or food. What do you want me to do? You say, sir, Papa, sir, you are old fellow. Eat both, no. then give me. You match that index. How? See, if the index got changed to 125, that means my inflation increased by 4%. Followed, no? So, if it is increased that year prices are going to increase. If inflation remains same, okay, say assume it has not changed. That means what price you fixed once, it will not increase. Same stagnant economy. Next 5 years down the line also same price. Now also same price. So now the first time 2019 the prices changed. Okay, 31st December 19 price change. So from next year, my every medicine, every food items are more. So 1 lakh is not sustainable to me. So you give me 4,000 rupees extra. Now comes 31st December or 1st January 2021. Now did the prices of the food medicine changed? Did the price of the food and medicine change? No. It didn't change. No. Why? Because what was my index? 125. Same index is 125 here. Since the prices didn't change, what you paid me last year you give me, because last year prices have sustained this year also. Last year medicine prices are same medicine prices this year. Last year sugar prices same sugar price this year. Why? Because last year index and this year index is same. Are you clear now, Vidya? Not clear? Okay, now if this price is going to become 130, then again I will not get sufficient money to eat, buy the medicine and the food. Now my expectation is, this is not 4,167 is not sufficient for me. So you have to give me that extra 5 points worth of this. So you will do 120, 1 lakh, 130, how much? So this is going to change into say 5,687. Now next year also index price remains the same. That means it's the same constant, but my base is going to change now on which to calculate. So I will take the same increase in the percentage, but I will apply on 1,10,000. Understood, no? The logic, why we are doing this, why we are keeping same set of assumptions. Okay, generally it will not remain stagnant, something will change. Again, you have to appreciate that what we are doing here is a miniature version of something very simple. In real life, do you think it's going to work like this? In real life, who has to do this? You only have to do it. Not somebody else. A robot is not going to come there. That's why you are hired, no? Why? Because you learn this. Because if you are not there at that place, there are a lot of mistakes are going to happen. Because other than you, who thinks you can do this, all this type of thing? Because you are learning it. And if there is non-compliance, then there is a hefty penalties, fines, all those going to come. That's why a miniature, simple version you learn here. And once you become a professional, you are not going to learn any other things, students. See, right now you are supposed to learn all 6 subjects. Your focus is there into different. Afterwards, full time what you do from morning 9 o'clock to evening X time, because incoming time is fixed, okay, in corporates. Outgoing is not fixed. What you will do? Sit and do R&D on this. Because that's your job. You are not into treasury, you are not into taxation, you are only into financial reporting. Then you have to talk to your boss, seniors, figure out what is this, what is the best representation. But to do that, you need a base. No? That base is this small virtual miniature problem, which is not a real life problem, but which is something similar to real life problem. That's why you have to understand the logics behind it, why I am changing it, why I am increasing it, why this percentage, why not other percentage. Okay, it may not be material, leave it. I hope it's clear. Yes, so what is my revised lease liability? 4,91,376 minus what is your balance book value? Now you take that chopped onion, you have kept side, no? 1,95,244. So 2,96,132 is the increase happening now. Okay, full last one, give one third and close this, prepare the dish. What journal entry I need to pass? Lease liability, credit to ROU liability. No P&L. Now going forward, 2,96,132 is going to get amortized at which rate? 6%. Then what is my depreciation? They didn't ask you. Can you tell me the depreciation? Can you tell me the amount of depreciation? 95,592. Okay, let us check others. Yes, how much? 90? 98,630. Okay. What should be my revised depreciation? Which they didn't ask. Because sometimes what happened? No, we think that tomato is required. Tomato not required only. We just chopped and kept it aside. Maybe it's a part of the working. 95,592. How did you get? First one. How much was the balance? 1,81,840 you have already depreciated WDV. Plus 2,96,132 you add divided by the remaining life of 5 years. If at all they ask you, or for the safer side, you can always give one journal entry going, or you can give one expense. Are you clear? Are you very perfect about this question? No doubts, no? Anywhere? Yes. So please pause the video, students. See, questions tricky are going to appear in the examination. Question easy, don't feel happiness. Oh, very nice question. I will practice that and go. They have set one trap there in the examination. So anywhere, that is your choice. You have to face difficult question. Easy questions here, difficult question exam. Difficult in the study material, ditto there. Highly probable. Okay, so please pause the video and do it. Okay. So before we proceed, is it the same question? Any twist? Conceptual twist? No. What they have twisted is, see, doubling the amount, changing the amount is not a twist in the question. Extending the period, like what happened? No, initially we had 5 years. Okay, that 5 year they changed into 6 years. And 6 years, extension 3 years, they made it to 2 years. Is it a twist in the question? No, we should not consider that. But in principle, if we look into the question, followed, no? This question is the study material question only. So my theory or my observation is the same. But generally what happens, since ICA is unpredictable, what generally happens, I'll tell you. Generally in almost, except this question, I can say, 99% of the question, out of 100, if I take all and shoot 100 question, 99 question, study material, no, always, they will give 31st March, 31st December, 1st. And in this particular study material question, they gave first quarter of 2021. If your previous question, they gave first. Generally, they don't give. In the study material, what they give? They give the price got changed on 1st January 2020 only. Nice. We solve it. In exam, you get this twist. This is generally happen, 99% of the case. What you would have done? In the study material, if I would have done previous question, I should have done that. In fact, I should have changed that previous question. Maybe provided next batch onwards. Now I will change the previous question. That first quarter I will remove and I'll say it got changed on 1/1/2020. Then I'll say, okay, solve this problem. First quarter of 2020 change. Change, no? Understanding change. Now you get into one confusion in the examination hall. So should I apply on beginning 2020 or should I apply from the next year? What you would have done then? So imagine, if for the sake of solving problem, if I would have changed the previous question and I would have made the previous question, instead of first quarter, I would have done 1/1/2020. Then you would not have asked me, no confusion, no, you would not have asked me any questions. Things would have sailed very smoothly. Then I would have given you, okay, solve this problem. Then you say, sir, in the exam they gave me a twist. What you would have done at that point of time? That's my question to you. My question is clear. What is your stand? Because I want to show you now something. What institute is doing. If the previous question you would have done a proper way, And in the examination you get, oh, the problem, it changed in the first quarter of 2021. In that point of time, what is your judgment? What would you have done? Would you take from the beginning only? Because in the study material they have taken it from the beginning. I am telling you, see, do you remember this question? I am reminding you from time to time. Do you feel like you have seen this question? What feel? You say, sir, I know this. This is the study material question only. In study material, what they have done? They have taken it from the beginning. But you say, sir, here it is given first quarter. No, Arey Baba, leave it. Any of you don't touch this question first. In study material, what they have done? They have done from first. No, do it from the first. Simple. Don't apply your mind there. No, if you want to change it, you say, sir, if I will apply from the next year onwards, do it. Because here in the suggested answer, they gave an alternative answer, telling some students could have done like this. Understood, no? So be prepared to face this type of things. Okay, all I don't want to discuss because it's the same thing. We'll straight away move to the answer. First, you would have prepared one amortization present value 13,98,040 you would have got. Did you get this number? Or you got something different? The present value factor? Maybe 4 or 3 digits or what you have taken. Have you taken one? Huh? That's important for me. Other things, leave it. Then I will move on to the lease liability schedule. It comes to 7,79,417. And there is one element which is not required. But again, they have done it. If you refer to the previous question, they didn't ask me the depreciation. But if the study material, if you see, they have done that balance. So if you don't do this, risk of losing 1 marks. 6,99,017. Then you recalculate, because how many years are pending now? 3 years are over. 2 more years, 4 years. I think out of 6 years, 2 years are over now. Okay, 18, 19, 20. 20 is over. So 21, 22, 23 plus 2. 3 plus 2. Okay. Then you got 13 lakh and you have taken the revised discount factor 13,18,408. Again, you have taken 1 here. And you have taken the same rate 2,80,000 and then 3,50,000. One more twist, I think that the base rate didn't change, no? If I go back to the question, I didn't read it. 2,80,000 and 3,50,000. Okay, so what they have done? Okay. So they have given it as a base, and then this is my rent, 2,91,200, 3,64,000. Yes. What is that? Economic? 5 years. Of what? Of some economic life of that. See, if I go back to the question, see, they said that you did not think that you are going to viable option to renew. So you had a very clear idea that you are not going to renew, but you made some changes to the retail store which increase the economic life of that investment by 5 more years. Like for example, you install one AC. Because of that AC, customers started to come to you. That is a customized AC, centralized AC, which is meant for this room. So if I scrap it, I will discontinue after 2 years. My life is still there for whatever 3 or 4 years. No? What I will do with this customized AC? I have to scrap it. So what makes sense to me? Renew it. So this is the which life is extended. That AC's life got extended. What you thought? What you interpreted? Lease life extension. Lease doesn't have a life. No. So that's what they say. They said major changes in the retail store, which is very silent. I'm telling what changes. You must have installed one AC, no? You must have brought one equipment. Followed, no? Yes. Now you got this 13,18,408, revised 5,38,991, and ROE set account debit to lease liability balance. You got this? Chalo, full out of full. Now A very strange thing for me at least, because generally they don't do it. They are helping us by doing this, for me at least, for faculty to explain like these two possibilities are okay. They said that, look, in the exam some students would have said, sir, it's the first quarter 2021. No, already you are opening into this is paid on 1/1/2021 only paid. Then how can you change it? You already paid. No. Then they said, like, students could have considered 4 more years balance. That means you apply this from next year on. Because the changes happened not on 1/1/2020. It happened on the first quarter. That means opening rent you paid, finish. The changes are going to happen for the next. So if that is the case, then they gave one solution. Look, if students have done that, my opening balance is not going to change because it is meant only for 6 years. What is going to change here? I would have calculated one more lease liability for the end of 4th year, because previously you would have calculated at the end of 3rd year, no? I would have done at the end of 4th year here. And this I am not going to do it because again it's the mid of the year. Again, complicated, no need to get, just to tell you that assumptions are also possible. Then you would have taken only for 4 more years, not 5 years, because previous year you would have left it. And then the balance would be different and you would have got a totally different amount, correct? This is a different amount, no? 5,38,000, 5,90,000. See, is there any similarity? No, but you should say it's fine. Subject matter of assumption. Are you clear? They have assumed that since the rent, that whatever extension, CMI change at the mid of the year, no? Not on beginning of the year, that whatever beginning rent, see, you have done retrospectively. You started from first. They said no, that is already closed chapter. The changes are going to be applicable from the next year onwards. So if it is happening from the next year onwards, then you are left with only 4 years. In your calculation, you did it for 5 years. No, they said no, the previous 2021 you forget it. It's already done. You do it only for 4 years. Because only 4 more years left. No, 3 years finished. But actually, at the beginning of 1/1/2021, you paid one more rent. No. So they say 4 year finished. Since the changes happened when, tell me, first quarter of March. So the changes happened on, say, 1st March 2021. Correct? Now, your assumption is this is retrospectively applicable from 1/1/2021. Then you should have started from 2021, 22, 23, 25. Some other students could have considered, look sir, this is already paid, closed chapter. So I will apply prospectively from next rent onwards, which is due from 1/1/2022. So those students would have done only for 4 years. You have done for 5 years. My point here to tell you that this type of twist, which may happen in the examination, is a subject matter of interpretation. Always you give top priority to what assumptions they have taken in the study material. You can take any assumption for that matter. Generally, they don't tell you alternative answers, which ICA also told. Suggested answer is meant for suggested only. Yes, so are you clear? What they are trying to tell here? Convinced, no? Yes. So we'll move on to the next question. RTP, company entered into a lease agreement for a retail store on the 1st April for 10 years. Lease rental is 56,000 per annum, payable in arrears. The company recognized the lease liability of 3,51,613 at the inception using incremental borrowing rate on 1st April 2021. Good. What's good? They only told me the opening balance. As per the terms, the lease rental shall be adjusted every 2 years to give effect to the inflation. Inflation cost index notified by the income tax department shall be used to derive the lease payments. Inflation cost was 280 for the financial year 11-12. Okay, because you also started from 1st April only. And 301 for the year 13-14. The incremental borrowing rate is 8%. Now show the journal entry at the beginning of the year 3 to account for the change in the lease. Now it is a case of a remeasurement, because when you started 3,51,613 you did. First of all, lease rent is paid at the beginning or at the end? Yes, students. How did you get 3,51,613? Can you just cross verify? Yes, students, can you please pause the video and just cross verify and check? Is it possible? How did you get this? Maybe in the exam they may remove this, no? How did you get 56,000 per annum into present value annuity factor at 9.5%? You would have got 3,51,000. So when doing this, did you take the lease rent at the beginning or the end? At the end. So question is very clear to you now. Simply don't ignore that number. Now what happened? Every 2 years it's going to change. So 2011, 12, 56, 2012, 13, 56. Now for the financial year 11, 12, when you started it was 280, and 13, 14, that new year, it is 301. Oh, that means first 2 years will remain constant. And then onwards it is going to change. Show the journal entry at the beginning of the 3rd year to account for this. Very simple question. Is it simple, students? Are you clear about this question? Do you want more explanation? Do you need more explanation? No, please discuss with me, because I want you to solve this problem. So have you understood this question thoroughly? You have any doubts, I want you to discuss with me. And your doubts are nothing but online students' doubt also. What doubts coming to you may be coming to them also. Are you very clear with the question? So lease rent is at the end. 2011-12 went with the same whatever you estimated. 2012-13 also went, because there is no change happening. But 2013-14 some changes are going to happen. You will have a new lease rent. But this is a remeasurement. Remeasurement because of what? Because of the change in the index. And whatever new you happen, it is going to happen for the rest. Is there any change in the terms and all? Extension, lease term and all? Not there. So what you need to do again, you have done already one problem. Probably in place of that, this problem could have come for your exam. So what you need to do is just show me that whatever journal you have been doing previously, you have to do it for this problem also. Are you very clear about the question? At the end of the year. How do you know? That's what I told you. Please cross verify this. From this you get to know. Yeah, correct. You payable in arrears. That means due you pay at the end. Sorry? Beginning of the whatever. Beginning of the when should I pass this entry? Beginning of the year 3. Because the 2nd year rent you pay. Immediately you know that there is a change from the 3rd year onwards. 1st year rent you paid, 2nd year rent you paid. But the 3rd year beginning only you know. So 2nd year end you pass, or 3rd year beginning you pass. Yes, students, so please pause the video, do the journal entry. Show me the journal entry. Yes, what is your question? The incremental, because borrowing rate will not same, no. Today you borrow at 9.5%. Will you say 9.5% will remain same throughout next 10 years? You're clear, no, Dhanashree? See now, your borrowing is incremental rate is 9.5% 1st April 2011. It need not remain same. It will change from time to time. Inflation. See now, I need not try to figure out the relationship between my incremental borrowing rate and inflation. Now question comes, whenever I remeasure it, which rate should I take? Should I take original or should I take revised? But you need to figure out. I told you that theoretically. Yes, sure. So we'll compare the answers. So before we proceed, there is one point about the discount factor. Which one do I take? Now in theory so which one? Original. See, in theory we discussed. What is that theory? Theory is, okay, whenever the remeasurement is going to happen, so whenever you do the remeasurement, you either have to take the new or original. What is the factor when you take new? When the lease term gets extended and you exercise the purchase option. When you take the original, when the index changes, or when the residual guarantee changes, or when variability is becoming insufficient, something like a variability related. If you observe these two set of things, do you see any pattern? What is the pattern do you see? You see, they have made one classification. Does it look like it gives you a pattern? The pattern is something like these two types. See, because only this brings the variability. Fixed will never bring the variability. No question of remeasurement if it's the fixed. These factors you bring, if you look, this is a substantial changes. These are all minor changes. Extension of the lease is a substantial, because if you see, it's going to bring one substantial amount into your liability right now. That means you have to give importance to what is right now. That means what you must have done on day one. You knew you will extend up to 15 years. You kept quiet. You wanted to avoid that liability. That's why, and you knew on day one you are going to buy, because buying this will bring you substantial amount of liability in your books. But if you see these things, no, literally you didn't have any control over it. Here you have got a control over it. Purchase option and extension is your control. Here, okay, even though it changes residual guarantee value, what it's going to change? In index based, what it's going to change? In variability substance, what is going to change? That means it's like a modification accounting. It is like an extinguishment accounting. That's why I need to go for a new rate here. I will go with the old rate here. Fine. Okay, so first thing is I am going to calculate the lease liability on the remeasurement date. I am going to get 3,04,273. You got this? Because opening balance they only gave me. I need not calculate. Now there is a variable lease payment depend upon the index. So it's going to change, and I'm going to use the discount rate of 9.5% only as per for para number 43 of Ind AS 116. If you remember, please quote the paras. Evaluator will become very happy. Okay. As far as I have, except one or two places, no, I will never use the word para here. Yes, okay. If you can remember, do it. But two places I am quoting para, because these are all like exceptions. Now I calculate the revised liability 56,000 divided by 280 into 301, 60,200, which remains the same. Present value factors I will take, and 3,27,127. So the increase is 22,854. So my journal entry will be ROU asset. Okay, are you clear? Why you are taking 9.5? Everybody got this number? So the increase journal entry will be 22,854 ROU to lease liability. Any mistakes? Anybody? What? You took the new rate? New rate you took? Okay, anyhow, no problem. See, make mistakes. Don't feel bad for that. But remember that mistakes. Yes, we are done with the remeasurement. Now we will go to the another important aspect called a modification. Okay, how the modification is going to get accounted? Yes, sir. So modification is the change in the scope. You change it, which was, or change in the consideration, which was not part of the original term. That's very important. If it was already part of the original term, then it is not a modification, it is a remeasurement. Now, what happens in the lease modification? Either the consideration is going to change or the scope is going to change. It may be including lease extension. It can be early termination. Timing of the lease payment can change. You can ask for additional space, or you can surrender part of the space. Followed, no? So we can broadly classify into three categories. Term can change, term may increase, term may decrease. Consideration can change for any reason. Consideration may increase, consideration may decrease. That means term is same. Space, quantity. Quantity can increase, quantity can decrease. One among the three can happen independently, or it can happen in a combination. Because your term is going to decrease. Consideration may remain the same, the rate, monthly rent what you pay. Or if you see the previous question, the CPI index also got changed, the term also got extended. But then you say, sir, it is a remeasurement. No? Yeah, if it was part of the original contract, it is remeasured. But if you do this, which was not planned earlier, you enter into a new contract to do the same thing, then that becomes a modification. Now, how to account the modification? Simple. The modification, you should account it as a new contract, like extinguishment accounting. Not extinguishment. You entered into a new contract, it's a new lease. Simple. Or adjustment to the current lease only. If you account it as a new lease contract, there will be two lease contracts. One is the old lease contract and there is a new lease contract. Like, I have taken this room. I want one extra room. Take one more room. Now, question comes, is that room a new lease or it is the same lease? You have to apply some test. Because I might have played there. Oh, so because since I am getting already your tenant, you might have given me that room at a discount. Or you might have increased the consideration here, decreased the consideration there. I don't know what you would have done. And if it is one, I am treating it as an adjustment to the current. It will work like a remeasurement only. But it depends, no, what adjustment? Is it a term, consideration, or your quantity? You may take additional quantity, no. Otherwise, yeah, if you talk about the term and condition, it sounds like a remeasurement. But what about the quantity? You may surrender. No, previously you had two rooms. One of the rooms you should terminate. You keep only one. There we didn't speak in the remeasurement, no. It can be, see, as per the original contract, if there was a provision to surrender some of the room and all, or get additional room, then yes, I told you, no, it's a part of your remeasurement only. Otherwise, it is a modification. Modification is accounted as a separate contract only if below two conditions are fulfilled. 115 flavor. It says that the modification adds right to use one or more underlying assets. That's obviously, that means extra quantity increased. Previously one tipper, this time you took one more tipper. One room, added one more room. One helicopter, you took one more helicopter. But, and the price what you pay for that additional is in line with the standalone selling price. If it fails, then you can't treat it as a new lease. It's a part of your existing lease only because why he gave you substantial discount? Because you are paying big amount of money here. Who knew? What is your intention? This is what you might have planned. Sir, initially my profit is very good. What I will do, I will pay you high lease rent and claim income tax benefits. 2 years down the line, I will take that additional quantity because right now I don't want. But give me that additional quantity at a lower rate of interest because my profit would have matured saturated by that time. So when my profit is less, I will claim less expense for the additional space. You understood? So that I will load before incurring that cost only. You don't know, no, in which direction human mind is going to run. The more you learn, the more sharp you become. And people have learned over 100 years. And this sharpness came now. 100 years back, it was not there. Because people didn't know many concepts. There was a point in time, people thought everything in the science is explored. We are done. And it was possible 100 years back that one could have studied everything in one particular discipline. Like everything about accounting I know. There is nothing more. This was somebody could have told 100 years back. But right now, such people cannot make such statement because one aspect is too deep today. Just 100 years, not thousands of years. Followed, no? 100 years back consolidation was not there, to tell you. Now consolidation is a specialization. Now, if a modification is not accounted as a separate lease, it should be accounted as a change in the lease. Now, what is the rules for accounting? Not separate, because if it is separate, matter is closed, finish. But if it is not separate, then there can be three possibilities: decrease in the scope, change in the consideration, change in the term. Because increase in the scope matching with the price will new, then a new entry will come, ROU to lease liability. But if it is going to increase or decrease but not incommensurate, then what I need to do, see, if the scope gets decreased, I need to remeasure the lease liability, obviously, no, using the revised discount rate, because scope has substantially reduced. So previously I recognized big amount of lease liability considering 2 rooms. One of the room I don't need it. Accordingly, ROE asset also should come down. That much right I am losing. In this process, I should recognize P&L, because my asset came down, liability came down. And the P&L is difference between these two, because it's a timing difference. Why? Because ROU is getting reduced at a WDV, SLM basis. Your lease liability is getting reduced based on amortization. Because of this match, you get one P&L. Now, change in the consideration. Consideration may increase or consideration may decrease without changing the term or the scope. Oh, only if you negotiate because of your hardship or whatever, then it is treated just like a remeasurement. Just adjust the ROU asset, no P&L. Like what we have done just now. Only consideration changed. You can call it by any name. Now, what if the change in the lease term, because lease term is also substantial. If it is going to increase, then you have to remeasure the liability, adjust ROU asset, no P&L, because liability got increased. But if it is going to decrease, that is very similar to decrease in the scope. My term got reduced, that means my lease got reduced. So remeasure the lease liability using revised discount rate, decrease the ROE asset, also recognize P&L. That's it, simple. So I have got 3 scenarios. Okay, so this lease modification can take in the form of term, consideration, scope. If the scope is going to increase, first question I'll ask, that increased scope is meant for the price what I am paying right now in the market, or have they given me a discount just because I am an existing tenant? If answer is yes, no, whether you are a new tenant or an existing, it doesn't matter, you got at a fair value, then the new lease is a new lease contract. If no, or the scope got decreased, straight away de-recognize the proportionate liability. So if the price is no, remeasure it and adjust to the ROE asset, no P&L. You got an additional space, but the price is adjusted with the existing. That means you have played with the consideration there. Simple. If you play with the consideration, remeasure your liability, no P&L. I'm not going to touch the P&L to happen, because I know that you would have played with the consideration there to give the timing effect to the P&L. No remeasure. No. If the scope got decreased, definitely P&L is going to come into picture. My term got decreased, P&L is going to come into picture, but the term is going to increase. Then I don't recognize P&L. Okay, go and do the remeasurement. And for consideration, doesn't matter. So P&L on proportionate reduction arises only when, because ROE is depreciated on SLM, lease liability is amortized. Otherwise, this problem would not have come to you. Now, lease modification, term and scope decrease, only going to give you the P&L effect. Are you clear? Yes. With this, if we solve the problem, you get a better understanding. Okay, just I'll have a quick recap again, so that more you see, more you remember. But more you do, more you understand. So 3 scenario. If the only consideration is going to change plus or minus, remeasurement and no P&L. If scope is going to increase, check additional price is matching with SSP, yes, new contract, no remeasurement. And you are able to figure out the logic, no? Makes sense to you, what they are trying to tell there. If it is decrease, P&L comes into picture. Why this decrease? Because you have to de-recognize both ROU and liability, and this difference is P&L. Increase not a problem, decrease is only problem. Why? Because what goes out is a book value or a proportionate book value. Increase, I don't have any problem. You just go on adding, no P&L comes. Decrease only gives you P&L. Change in the term, decrease, increase, go on adding, remeasurement. Decrease, P&L comes into picture. Okay, so are you clear, students? Yeah. So only decrease of term and scope is going to give you the P&L effect. Okay, this I explained you. Yes, we will move on with the question number 12. Lessee enter into a 10-year lease for 5,000 square meters of office. The annual lease payments are 1 lakh payable at the end of every year. Good. Interest rate is cannot be decided, so you took the borrowing rate 6%. So it's a very plain, easy question. Fixed rent, no remeasurements. For next 10 years, I'm going to pay 10 lakhs, 1 lakh. Present value, annuity factor, you multiply, you get the present value. Now at the beginning of the year 7, that means 6-year rents you have paid. You amend the original lease by extending the contractual term by 4 more years. Is P&L going to come here? No, it's just a remeasurement going to happen. The annual lease payments are unchanged, payable at the end same, but the term is got extended. Again, see how nice. Good. The incremental borrowing rate is 7%. Now this I need to consider because the term got extended. New rate is going to come. How the modification will be accounted for? Yes. So if I look into this scenario, it is the change in consideration didn't happen. Scope didn't change. Term got increased. Increase is going to happen remeasurement with the revised discount rate because same previous remeasurement logic. Right. Solution. Initial lease liability is rupees 7,35,900. In bracket you can write 1 lakh into 7.3590, which is present value annuity factor at 6%. Or you could have done one working also for this. Annuity factor total you could have done working note 1, discount rate factor. Generally they would have given you in the question. Take the total of this, find out the lease liability. What should I do next? What should I do next? Balance, same remeasurement. No, so I will go to the next same thing. Lease liability modification. So year 1, 2, 3, 4. How many? How many years I should put? 5 should I put? 6, 7? No. At the beginning of 7th year, lease rent you are paying at the end of the first year. What is my next column? Cash flow. That we already calculated in the previous step. Huh? What I'm trying to do here? What is that I'm trying to do? Amortization schedule. Why? Because 6th year closing balance I want. Why? Remeasurement I need to do. No, and figure out how much additional entry is going to come there. It's a remeasurement case. So it should not make any difference to you this question and the previous question. So I will write here opening balance 735,900. What is the next column? Interest. Why? Because the lease rent is paid at the end. At what rate you discounted, Baba? This when you are preparing this. When you are preparing this, you are preparing at the beginning of the year. For how many years? 10 years. But since they asked me how you are going to account this modification, I don't need to prepare for all 10 years because I wanted the closing balance of the lease liability at the end of 6th year, so that the moment I calculate the revised lease liability, that and the previous difference, I'll pass one accounting entry debiting the ROU in the remeasurement. On the 7th year, how you will find out how much is my revised balance. At that time, you will take 7%. This is the original, no. It comes to 44, 154. How much is the lease payment? 1 lakh, no change. Closing balance 6,80,054. Like this, you will continue. I don't think so there is any problem here. Write the closing balance, right? You have already written, no? You fill it later. It's not an administrative, procedural thing. Get me this balance. And if you want the previous one, present value of the future cash flow, you could have done rather than using annuity. 1 lakh, 1 lakh, 1 lakh, 1 lakh for next 10 years, 0.909, 0.826, 0.751. Multiply and you would have got like 7,35,900. You would have spent so much of time. That's why you are taking a risk. But don't take the risk. If they don't give you the present value factors in the question, do one working note. How did you get that annuity factor? How did you get that annuity factor? I wrote here, but in a calculator you can't do it and write in the exam, no? So prepare one working note, plot all 10-year annuity factors, take the total, then you do calculation of the initial amount, 1 lakh into annuity factor. Look into the marks, just take your judgment. Hardly one place I have seen that, what institute has done, only one place. I start wondering why they have done that. Is there an expectation? Because they don't tell their expectation very clearly, no? Just like life. We don't know what is going to come. Okay, modification accounting. Now you have to account for increase in lease term. What we need to do? Remeasure only lease liability based on 1 8-year remaining term. How? Original 10, out of that 6 finished, 4 remain. How much you asked extension for? 4 more years. So how many years remaining now total going forward? 8 years. Lease rent of rupees 1 lakh only. Did it change for the revised portion? No. At new rate of 7%. Why? Because it's a remeasurement of the lease rent, a lease term extension. Difference is so you can write like this: the difference between new liability and book value of old liability, what you do is adjusted with what? With the difference between the new lease liability and the book value of the old liability. What you are going to adjust? Obviously, one leg will come to that lease liability account only. Another leg will go where? With the ROU asset with no P&L. There is no P&L in this case. Because nothing goes out, only things gets added. Correct, no? The more and more you buy the shares, will you say I made a profit? No, added. You make the profit when something goes out. The difference between what you got versus what you paid. That's profit. Yes. Are you clear? Yes. Now we will do the readjustment. Working note number 2. Adjustment to lease liability. I need to make an adjustment. Now tell me, what is your modified lease payment, lease liability? Otherwise, we would have done one modified lease value. I could have prepared one amortization, one schedule. 1, 2, 3, 4, like 8. Can I use the present value annuity factor? Because my term remains same. No? Previous question, why we did calculate it separately? Because some consideration were difficult. So it is 1 lakh into, can you tell me what is my present value annuity factor? 4.7, 5.97. Not first day finished, no. First day we did this, we didn't pass the entry because they didn't ask me. Now 6 years I finished, and this would have continued. 7, 8, 9, 10 is there, but it is not no more relevant because the modification happens. That's why I take this balance now. Yeah, please have that clarity once. And simple accounts, no headache, not like other subject. Sit and just think what happened now, because what is our job? Maintaining timestamps. Nothing happens, no entry. Something happens, pass the entry. To pass the entry, do the calculation. That's it. That's why our job is much simpler actually. Just think what happened on day one. Okay, these are all things happened on day one. 3,46,000 is the balance. Now I'm going to modify now, right? I'll write some theories. And if you observe, is it not the same pattern what we are doing in 109 modification also? Then modification comes, wheel and co. Then we want to say we have 10th year, then we have to perform substantial test. Then we'll do the test and then say extinguishment accounting. Then we'll calculate the new value. And then finally, ultimately we have to go to the journal entry. All this Dombarata we are doing to pass that journal entry, no? Journal entry is easy, but calculations are okay. Now, why did I do this calculation? If you don't want, you do the table like 1 lakh, 1 lakh, 1 lakh for next 8 years. Rather than, tell me, present value annuity factor I was standing. 5.971 at 7% for 8 years. 5,97,100 less. What is my book value of lease liability on this day? Yes, already we have calculated that, 3,46,355. So I need to pass, and why I wanted that value? Because I want to pass one accounting entry now for modification. What was that balance? I didn't know. That's why all these calculations I did, which has got a mathematical flavor here. But the underlying plus or minus comes from the debit and credits. If you just figure it out, then you say, "Arey Baba, simple. Accounts means drinking water may be difficult for you. Once you practice it." My daughter, no, she drinks water, how you know? One sip at a time. I drink water like if I take full, water goes into this. What is the difference? Practice. That's it. That's why even say, it is like drinking water. But drinking water is not so easy job. And for a kid, if I give that, no, I have to give in spoon only. Kid is going to choke because it has no practice there. That's why choking you don't want. Practice very well. Then it becomes like drinking water. Yes, my journal entry comes now. ROS at account debit to your lease liability. Done, finish. Clear? Yes, so we'll move on to the next question. Let's enter into a 10-year contract for 5,000 square meter. Beginning of the 6th year, that means how many years you finished? 5 years you finished. You amend the lease for remaining 5 years, no change in the term. But you say, sir, please reduce my payment. I cannot afford to pay 1 lakh. It is reduced to 95,000. The interest rate you didn't know. So borrowing rate is 6% when you took the lease initially. And the incremental rate is on this beginning of 6th year is 7%. Okay, good. Lease rent is payable at the end of every year. How should the modification accounted for? What type of modification it is? Change in the consideration, neither quantity, neither the term changes. Now, it's just a matter of subject of a remeasurement period. Followed, no? And so when I do the remeasurement, again, all remeasurement cases, again, no original discount for calling new calculation value because it's the modification. No? So we are going to remeasure using the new discount rate for the remaining period, whatever it is. But it's the remeasurement. Again, don't go back to the original, original discount, because when you talk about this remeasurement, workings are same, but discount rate logic is not that. In all the remeasurement, new. Why? Because it's a modification. If it was part of the original contract, then I will take that original EIR for other than term and purchase option. If it is part, because it was never part, no. So all the remeasurements are going to happen at a new rate. So students, please pause the video, do the working, pass the journal entry. We'll compare the answers. Yes, students. So we'll compare the answers. So first thing, my lease liability will be 7.35. See, again, if you open the study material, no, what they have done, they have added 1 lakh, 1 lakh, 1 lakh, 1 lakh for next 10 years. They have given us a working note into present value factor for the first year, present value factor for the second year. They have not taken as a present value annuity factor. So I suggest for all this modification, again, I am going to change the PDF also. I'll give one working note. Working note is like present value factors. You add and make a present value annuity factor and use this present value annuity factor and calculate the value. Understood, no? And why I'm doing it? Because institute has done that way total. It's going to take my hell lot of time there. By doing, I think they will give me 1 mark. Which one? End of the year, no? So how much is the present value annuity factor you got? No, they have told here very clearly, no? The amount is payable at the end of each year. Please observe. Huh? One or 2 marks, that's what, you'll look into it. I'm telling you that this is the case. Followed, no? So if you find there is a problem or a risk, do one thing, simple. What is that? Do this working, leave some space, then continue with your work. If you get time later, come back. Alternatively, it can be solved this way. Prepare a table. You don't get time, strike it off. My point is, why you want to spend time initially for that 1 mark? Do this shortcut. Follow? No. I'll show you in the next question how to do it. Next question, do it. Okay, you missed this. And did you get this 7.3590? It's the present value annuity factor for 10 years. Huh? Not for 7 years. I'm doing. Next, we will calculate the modified balance. We will prepare an amortization schedule. And I'll get 4,21,090. Did you get this number? Next, I will move on to the modification accounting. I'll tell you it is going to only a remeasurement because only consideration is going to change. Nothing else. No P&L is going to come. The difference I'm going to adjust with the ROU asset. Now, to figure out that difference, again, I will tell you, you have done one shortcut here. Right now, do this shortcut, leave some space, proceed further. Okay, what you will take? 95,000 for remaining 5 years. Present value annuity factor, you got 3.89. Carrying amount of the liability will be 4.21. Adjustment will be 31,590. You got a negative adjustment. That means, what is the entry? Lease liability is going to reduce to ROS. Obviously, it makes sense, no? From 1 lakh to 95 million, liability should get reduced. So, everyone got this number? Sorry? That's fine. Let's see. In the next question, if you see when that examination, that question came for the examination, generally they will give you the present value factors. I'll show you in the next question. Followed, no? Yes. It's very simple. Yes. Now we will come to the proper question which can be a probable examination question which has come. Let's see, enter into a 10-year lease term for 5,000 square meters of office space. Annual is 50,000 payable at the end of every year. Very good. No headache. The interest rate is 6%. Then okay, I would have started my journey with the 10-year, 50,000 into 10 years. Simply wasted time there. Now at the beginning of the 6th year, that means 5 year finished, you agreed to amend the lease to reduce the space to 2,500 only. Oh, this is not the consideration problem. This is the, see, first problem we solved with the term. Second, we solved with the consideration. The third, we are solving with the reduction in the quantity. Because if it is the upward quantity with the same value, then actually it is not a problem to solve. No, it's a like normal problem only. If the scope is going to increase at a price which is in line with SSP, such problem you don't expect. Because it is like a new lease only. No, it's a very simple. Reduction, which is something similar to the consideration. If it is not in line, consideration change. So now, starting from the end of the first quarter of year 6, that means from 6th year onwards, things are going to change. 5-year finished. Lease term from 6 to year are 30,000. Okay, because of a reduction in the quantity, my lease and rent also reduces. But is it proportional? No, that means my consideration also sitting there. Proportional means for 5,000, 50,000 I pay. For 2,500, how much I should pay? 25. But what I am paying? 30. That means there is some other element also sitting there. I must have renegotiated. Incremental borrowing rate is 5% now. How should the modification be accounted for? Yes, so this is the case. Okay, now when it came in the examination, see, they analyze the effect of the modification. That means we have to give that theory. Because if you see the study material, they simply say how it should be modified. But in examination, they said analyze the effect. That's what we are writing. No, oh, this is we're going to calculate, the difference will adjust there. That's analysis. The components, how do you adjust it? Give the journal entries for the same when on the date of modification, and they have given you the present value factors at 6 and 8%. Not applicable for this problem because in the examination problem, it's the same ditto question. If it was not, I would have given separately and say, please solve it. Let me see why they would have given you this question ditto. That means this must be little complicated, should be there. Students will run away from this problem because they have made it much confusing there. Now, okay, now in one more thing, what they have done, see, generally, maximum cases, whenever they give study material problem, no, they give you 50%. Always. Anything, anywhere, suppose reduction happened, some hike happened, all these things, no, they will give you 50%. So when it is 50-50, it doesn't make any difference to you. Now, generally what they do in the examination, no, they change this 50% into 60-40. That's conceptual. 50-50 is a procedural there. Now, the moment they change into 60-40, now you get into confusion. When I did it in the study material, which percentage I considered for my calculation? This leg or this leg? We don't give importance there because problem solving, no, fata, it will happen. We don't think when we do certain calculation, which percentage in examination will get caught. That changes a question into a conceptual question. But you see how kind ICAI is. In exam also, they gave you 50-50 only. That means this question is a procedural question in the examination. Followed, no? You understood the difference? Yes. So first we will solve this. Okay, this case what happened? Your consideration changed. Modification happened. This decrease happened. P&L is going to come into picture. So two aspects came here. Because if it was proportional, then consideration would not have come into picture. Okay. Somewhere we have to risk here some marks, okay? Because if you want to understand study material way, you please go through the study material because I have taken some shortcut here. I will tell you at which point I have taken. Okay, first do one working note number 1. Working note 1, calculation of present value annuity factor. Present value annuity factor at the rate of 6% for 10 year is equal to this strategy I suggest you. First to calculate the present value annuity factor. So the lease liability on initial measurement is equal to 50,000 into 7.5359. So that comes to 3,67,950. And then leave some space to do this working. Detailed manner, if time permits you, which generally should not in FR. Followed, no? Okay. Next, what should I do? I want a lease liability balance at the end of 5th year. So write lease liability on modification working note number 2. So I'll write year 1, 2, 3, 4, 5, because at the beginning of the 6th year, end of 5th year. My opening balance, by now I think you must have used to this, 367,950. My interest will be at the rate of 6%, 22,077. Lease payment is how much? 50,000. Very simple plain question. Closing balance will be 340,027. Now this will continue. Perfect. So like this you will move on. Just note the last figure there. Other things you can fill it up later. 2,10,546 if you continue this. What is next? What should I do next? What we did generally? ROU balance. Okay, what is my ROU balance? Working note number 3. They may be expecting me to prepare that year-wise balance. Baba, enough. I have a lot of other things to do there. So many big questions are there. I will take opening balance. I'll take one shortcut here. 3,67,950 less depreciation for 5 years. 367,950 into 5 by 10. And why do I need now? This time I need. Proportionate reduction is going to happen. In all previous question, this balance was not required for me. We used to do this calculation because study material they had done it. Because modification entries were not coming, because all the time it was increase. But since this time decrease is there, I need this balance also, 1,83,000. Now we will write the modification accounting. What happens for decrease in scope? What I should do? What should I do? Straight away write P&L. How do I P&L came? Please help me. When the scope decreases, try to recollect whatever I taught you, what you understand, what you know. When the decrease in scope happens, what should I do? Which book value? Book value will what? How much? I'm asking number here. No. Theoretically, how much it will reduce? Theoretically, yeah, book value is going to reduce now. How much? Theoretically. Don't look at the number. No, number, I'm talking to you theoretically. How much theoretically my book value should get reduced? Proportionate. I'm looking for that word. So, since it is going to reduce, you say that the entity proportionately reduces or derecognizes lease liability and ROU balance. Thus, gain or loss is recognized in the P&L. You can ask me, okay, if you don't understand my handwriting. So whenever the scope is going to change, you explain how do you account it. When the consideration is going to change, you first explain how do you account it. Look, you say that, look, this is what I am going to do it. Test is not required here. It is not 109. Otherwise, I will do substantial test. Then I will do this. Followed? Now, can I pass the... Okay. Then there is one more problem. Is it the only one scope got changed? No. For consideration change, what I will do? We do remeasure the lease liability. See, if it was simply scope reduction, but same term, what I would have done? Simply reduced the proportionate value, recognize P&L, continue with the balance, finish. Life was simple. But they didn't want your life to be simple. They added one consideration change also. Otherwise, if it was 25, then you would have simply reduced liability, simply reduced your asset, pass one entry, lease liability to ROU, to P&L, whatever, and then continue for balance. But your liability also changes. That is why you need to remeasure the lease liability for remaining how many years? 5 years. Term didn't change. Term also could have changed. But I say is consider it. With payment of how much? Rupees 30,000. At which rate? 7%. Sorry, 5%. No? 7 was all previous story. 5% per annum. Now I may get a difference now because with the previous step, I will reduce proportionately. But with the new calculation of the remeasurement, I'll get a new liability which I will compare to the reduced value. Because when you find out 30,000, when you find out the, see previously the lease liability was sitting for 50,000 rupees. You reduce it, you get reduction value. This you compare with the 30,000's present value. Definite difference will be there. Yes. What you do with the difference? You adjust with the RU. Same or more story. Because this remeasurement is applicable here. Not clear? Please ask me the question. Please ask me the doubts. That's the purpose we are sitting here. You understood the flow, no? Because first thing what I'll do, I'll give the adjustment to the, I don't touch the value because see, finding out the present value of 30,000 rupees and comparing with the book value meaningless. Because book value is for 100%. 30,000 is for 50%. So first 100% you bring down to 50%. If this was the only thing you would have done, finished, only one entry. But this 50% is not at a fair price, no. Then you find out the present value of this 30,000 and compare, then makes sense. That's why my first adjustment is always for the scope reduction. 100% I cannot compare with the present value of that 30,000, which is 50%, which is study material 50-50. If they give you 60-40, then so scope will reduce by 60. Followed, no, that way it goes. I'll tell you as we proceed further. Have you written this theory? Yes. Now we will write working note number 3, modification adjustment. See, draw two things now. And please go through again what we have done. Are you getting a flow there? Now, pre-modification carrying amount. How much? This is my ROU. This is my lease liability. How much pre-modification carrying amount? Can you tell me? And when I am doing this modification adjustment, when I am doing beginning of 6th year. So what is my pre-modification means? End of 5th year. 183,975. Lease liability 2,10,546. So first thing, I want to reduce minus new carrying amount of ROU after reduction of the quantity. How much quantity got reduced? 50%. So 1,83,975 into 50% I will reduce it. 91,988. I have got a new balance now, which will be depreciated for how many years? 5 more years. Followed, no? Now, what is my revised lease liability? You take 2,10,546 because for when you consider revised lease liability, see when you are adjusting quantity, you keep price constant. You're not going to see because if you mix both, you get confused. So you are assuming when you are doing this, you are assuming that like my price also came down 25,000. So you take 2,10,546 into 50%. 1,05,273. So because of the quantity, how much is the reduction in term modification? You say that 91,000 I have to debit credit ROU, 1,05,000 I need to debit lease liability. And in this process, did I made a gain or loss? When by reducing proportion at 50%, did I made a gain or loss? What is there? I told you, no, in confusion, look at the journal entry. Huh? Or apply your commercial common sense. What is commercial common sense? Nice word, no? Commercial common sense is, somebody says, okay, I will take your 1,05,000 liability. At the same time, I'll take your 91,000 rupees asset. Am I happy or sad? That means, okay, I've taken loan from the bank, which is 1,05,000. They say, okay, just pay me 91,000, enough. This is commercial common sense. Within no time, you will flash. I'll give example of our land. Oh, land I purchased. If I talk, oh, there is one option, forward contract on land. Then you think. See how beautiful our brain, no? Thinking process. Thinks in a simple language, which you understand within no time there. So, did I made a gain or loss? I made a gain. Bank is telling me, don't repay me 1,05,000, pay me 91,000 only, finish. So, your gain on modification is 13,285. This is called a commercial common sense. No, you don't have commercial common sense, no problem, Baba. I don't expect that. You develop as and when you proceed. What I said, look at the journal entry. What my journal entry? Debit liability, credit asset. So, balancing figure should be gain only, no? Perfect. Yes, let us pass one journal entry. Now comes in examination, they would have to go 60% reduction. Then should I multiply 60% here or 40% here? 40% I should multiply, because this represents 60%. Somebody may multiply 60% straight away here, because 60% reduced, no? Reduced should be the balancing figure there, because what you want to keep, that you keep it here. 40% is remaining with me. This is what happens generally in the exam. Okay, pass the journal entry. Journal entry will be lease liability account debit, ROU to gain on modification. But this is fine, because I have to recognize gain on the proportionate. But my consideration also changes now. Clear? Which one? Always maybe it may be again. Why? Because my ROU will be depreciated on a SLM basis. This is WDV type of thing, like initial big amount, late will, as I proceed, it will reduce. Yes. So next thing is, I have to calculate the remeasurement adjustment for that consideration. Institute has given one more journal entry, but see, I am avoiding it. I am giving one consolidated effect. I will show you what Institute has done, so that you see what you need to do. Modified lease liability on measurement, how much? Can you tell me, students? What should be my lease liability, actual lease liability? What we just reduced it. But when I reduced it, my assumption was, for the remaining quantity, the proportionate lease rent is going to continue. But in reality, it didn't happen. In reality, for the remaining quantity, I changed the consideration also. In this working, since I straight away reduced 50%, my assumption is, when the quantity reduced, consideration also should have got reduced proportionately. But in reality, it didn't work. That's why I'm splitting it. So, what should have been my lease liability on the remeasured day? Can you tell me, students? Please pause the video and tell me. This gives. Okay, students, so your doubt is why that 8 and 6%, that is an examination question. And why did I didn't repeat the examination question. I just wanted to show you one extract. Look, this is what they do in the examination. Otherwise, I would have repeated that examination. It's the same ditto question with the change in number. Procedural, proper procedural question. Follow, no? Okay. I am very happy that you all got 129. Yes, correct. I use the present value annuity factor 4.33 because it is 5% for next 5 years. I will end up paying 30. Okay. What is my balance of lease liability right now after reduction? Because this represents 50%, no? What is my 50% lease liability balance? When it is 50-50. When it is 60-40, you understood, no? You took this, okay, now I will go and say 1,05,000. Be careful in the examination if at all, they didn't give you, luckily, but if at all they say 60-40, this should be representing 40% because this is also representing 40% balance, 60% given back. You have to take the respective book values there, followed, no? So my adjustment will be 24. What entry I'll pass? Yes, for this I'll pass the entry ROU asset account debit to lease liability. Followed? So you can give a note. This is what this thing. Assume that the new payments are also at the end of the year. Leave it, not required. This is the general entry. Are you done? Yes, there is one note that, look, assume that even after modification, the lease rent are paid at the end of the year. Now, I don't know why this note is available, but if at all they say that the lease rent modification happened, but as per the modification, the lease, they agreed to pay the lease term at the beginning of the year. Then what you did at the end, no, that will become at the beginning. Then the new amortization schedule or whatever you will do, shift is going to happen. Anyhow, that type of questions we don't have. But once you are thorough with the concepts, this is called a plug and play. They will play, they will twist. You can modify it because you understood how it operates. Followed, no? Yes, this is for our understanding only, okay? Just please look here, you need not solve this. The scope change has effect on the consideration, not the consideration change has got effect on the scope. That's why first we will always account the scope first and then we look into the remeasurement. This is what we have done in this question. Now, my opening balance was 3,67,950. So we got 2,10,545, correct? In our question, we got, no? Just 1 minute, let me check. 2,10,545. Now, from the 6th year onwards, if at all, what would have happened? If at all, proportionately my liability also would have come down because 2,500 reduced, no? If there was no price impact, then it would have been 1,05,273. Alternatively, take this balance and take 50%, 1,05,273. That's why when we took that liability also got reduced by 50%, our assumption was assuming that this is different because I made that constant and then we calculated 50. Then we gave the remeasurement adjustment because in reality it was not 25, it was 30,000. The 5,000 extra was the remeasurement adjustment. What if the 40% reduction would have happened? Now, this is the same, 30,000 reduction happened. So, alternatively, we could have taken 2,10,545 was there, 1,26,000. Alternatively, we will take 60% of this reduction. We have got the same. Yes, so now we will move on to the question number 15 because it came repetition in the exam. I hope you can practice it yourself. This is question number 15. Building Limited entered into a 10-year lease for 6,000 square feet of office. The lease payments are 60,000 at the end of every year. Good. The interest rate implicit in the lease cannot be readily taken, so you took 8%. So first step, calculate the present value of the annuity factor of 8% for 10 years. Multiply with the present value annuity factor with 60,000, you get the initial lease liability. At the beginning of 6th year, that means 5 years finished. Building and lessor agreed to amend the lease to reduce the space to 3,000. Again, they gave you 50% reduction. Square meters of the original space starting from the end of the first quarter. Annual lease payment from 6th year to 10 year are 35. No, wrong. Again, price adjustment is also 615, 5,000 rupees. Buildings borrowing rate is 6% now from 8 to 6, same like previous. CF of the company required your suggestion. See, MTP question, study material question, how do you account it? Suggestion means I have to write now, give my observation. How to account this? Prepared a detailed working for the modification. So again, we know that this is the same scenario like the previous question. I want you to pause the video, students. Think how you solve the previous question. Do it yourself throughout. Okay. So what you can do here, see, present value is 6.71. I will tell you some numbers. Present value annuity factor 6.71, so that your workings are faster and you maintain the uniformity. And when you do this modifications and all fine, and present value annuity factor you take no later 35,000 into, you take 4.212, 3 digits, 3 decimals. Yes, please do this working. Please pause the video and do the working. Now, why I told you, because everybody's answer is same. Yes, students. So we'll check the answers. Yeah, I think you have done that. Initially, I'm going to recognize that 4,02,600. Then we are going to calculate the lease liability on the modification day. Very important. 2,39,555. We start with the 4,02,000. Interest will be at 8. Lease payments, I do this normal. 2,39,000. Now, my balance of the ROE asset will be 2,01,300. 4 lakh minus 5-year depreciation. Now the modification is going to happen. So we'll write scope is going to change. P&L effect is going to come. And for the consideration, only remeasurement is going to happen. And the difference will be adjusted with the ROE asset. Modification adjustment. So I'm going to reduce the proportionate ROE asset and I'm going to reduce the proportionate lease liability also 50%. And I see this first part is okay with me. ROE asset you are reducing 50%. Are you very clear why I am reducing this 50%? Second part, I just showed you one example for our understanding purpose. So when I shared this PDF, please go and understand why. What is the logic I am doing this 50%? Because somewhere in the next question I don't do like this. I do it in a different way. So when the term is reducing, why I do that way, I showed you already. Okay? Because if you want, alternatively what you could have done, at the original rate, you find out the present value of the future cash flows. You would have got the same thing. Gain will be 19,128. I would have passed this accounting entry, lease liability, ROU to gain on modification. Then I will do the remeasurement. 35,000 is present value, I will for 1,47,000. Carrying amount will be 1,19,717, 27,643. So I'll pass the accounting entry, ROU to lease liability 27,643. Yeah, fairly okay. I seen done. Yes, this question is a very important question. Lessee enters into a 10-year lease for 2,000 square meters of office space. The annual payments are 1 lakh payable at the end of the every year. Okay, all these are in the series of the illustration 34, 35, 36, 37. The interest rate is 6%. Yes, we understand that. Present value annuity factor we do same story. It comes to 7.359 because 10-year at 6% rate of interest. Present value annuity factor will be 7.3590 and we get the present value of lease. No problem here. Beginning of 6th year, that means 5 years finished. What is your amendment? You include an additional 1,500 square meters of the space starting from the beginning of the 6th year. Oh, scope got increased. So it is 2,500 plus 1,500. Now reduce the term from 10 years to 8 years now. You reduce the term. Reduction in the term is going to give this P&L effect. Increase in the scope will not bring this P&L effect. Now increase in the scope is in line with the previous rent or whatever new rent, SSP, new contract. Not going to affect this. But if the increase in the scope at which rent is in line with this, if no, then the remeasurement is going to come into picture. You understood how it is going to mix? Followed, no? There are two things. One, quantity change. If the quantity increase happen at SSP, no headache. Leave this entire line, don't mix it with this question. That's a separate contract. But if it's not, then it is going to go for a remeasurement. You reduce the term. Term reduction also will reduction in the P&L effect. That means my proportionate quantity, what we have done previously, for reduction in the quantity, we did minus 50% of ROU, minus 50% of this. Similarly, I have to do it for this also. Now, the consideration for the increase in the scope is not commensurate with the SSP. I wished if it was SSP, then I would have totally ignored this. I would have applied only that reduction in the term, all those things. But since it is not, then it should not reflecting. That's why I have to do one remeasurement. The lessee do not account the increase in the scope that adds to the right to use as a separate lease. Obviously, this sentence they need not tell me. They just tell me that the increase is not incommensurate with the SSP. I understand that, yes, it's a part of remeasurement only. I cannot account it as a new lease. How are you going to modify this lease? In this problem, you have got two effects here. One, you increase the consideration, its quantity, but since it is not in line with the consideration is not in line with the SSP, you are going to remeasure now. At the same time, you decreased, so you are going to reduce it. Followed, no? Yes. Start the solution, right? Initial measurement of lease is equal to 1 lakh you pay into 7.3590. Okay, no, for practice purpose. You understand it? I have given I will give you as a working note 1. Present value annuity factor working note 1, then do this. I will amend this, I will change. When you revise, look at this, do it as per that. So my total lease liability comes to 7,35,900. This is my first working note. Calculation of the lease liability. Now I will calculate the second working note. What is my second working note? On the date of modification, what is my lease balance? So I have got the opening balance 7,35,000. Interest will be at 6. Lease payment 1 lakh. Closing balance 6,80,54. Like this, it will move on. Yes, students, you can pause the video and calculate this. The balance comes to 4,21,090. You can pause the video and complete this. So students, if you observe these questions, since already complexities are there of reduction, that's why every question they said lease rent is at the end. They didn't say. But certain questions which is already simple, they complicated it by telling lease rent is at the beginning. Yes, can I proceed further? Just note down this balance. You can do it later. And what is my next step? What should I do next? ROU balance. So my ROU balance will be opening 7,35,900 minus depreciation for 3 years. It comes to 3,67,950. Again, students, you can pause the video and complete, because for me, the next is very important. What we are going to do next. Yes. Yes. So first write the theory now, modification accounting. What should I write? Which one I should account first? Remeasurement I should do or first, or term I should do first? See, understand, if I do remeasurement, remeasurement is meant for what? Change in the consideration, which is in line with that proportionate amount. But my quantity came down, no? So first always, because proportionate quantity, I am going to reduce it for the sake of remeasurement. Because when I remeasure, it is for a reduced quantity, no? It's not for the full year. So for reduction in the term, what should I do? Can you please explain me? Can you help me? What should I do? Reduce proportionately ROU and lease liability and recognize P and L. Because there was a scope and the consideration. Here there is a quantity and term and the consideration. Additional you added, but what happened? The price is not commensurate, no. So problem is not with the quantity. Quantity addition, fine. If it was price was in line with the SSP, you would have totally separated it. But your biggest problem is when the additional quantity added, price was not in line. That means price is adjusted with the existing product contract. Why the price was not in line with this? Because the price was already adjusted in the original contract. Now original contract lease term is 10 years. Now it got reduced. First you reduce that. Okay, see again. That's why I told you scope for the scope and the consideration there. Here what we have got a term and a consideration. So always give priority to the reduction first. And only in two circumstances reduction like P&L effect is going to come. When the scope gets reduced or when the quantity gets reduced. So when one among the two comes into picture, give first priority to it and then go for all the remeasurement adjustment. Follow? Then for remeasurement, now a normal story. For increase in the scope, because for me there is no P&L effect, no. What is my accounting entry for increase in the scope? For non-SSP, ROU to lease liability. So for that entry, you keep it always last. And if it was not that entry, I would have taken it separate. I hope you are clear, no? For increase in scope, not in line with SSP, I simply say remeasure. Enough, no? Remeasure. Difference, adjust with ROU. No P&L. Previously, difference adjust with the P&L. Here, difference adjust with the ROU. I am giving a shortcut version for our practice sake here in the classroom. But in the examination, I hope you will write a proper detailed theory. Why? Because study material will say how modification is accounted. In examination question, they will ask you, analyze how the modification is accounted. So you have to explain that. It's not a calculation. Okay. Now let us understand the calculation. See, I told you previous question. We got this 4,21,090 by preparing the amortization schedule. Previously, it was all 5 years and it got reduced. But going forward, what happened? The term itself reduced, no. So since the term itself reduced, I can't apply that 50%, 40% logic here, no. You understood? I cannot apply the 50%, 40% logic because here previously term was same. There were two ways to calculate. I showed you. One, if I had to show you the previous calculation, one, present value of the future cash flows will give me exactly 4,20,000 into 0.4% or whatever, 40% or 50%. But here I cannot do that calculation. No alternative way other than present value of the remaining future cash flows. So when the quantity reduces, I have got an option. What is my option? One option is you got the book value here. You simply take 50% of this. You got the new book value. Or remaining cash flows, present value you find out, you get the same. But when the term reduces, you can't apply that 50% logic here because quantity didn't reduce. So you have to find out the future liability, which is present value of the future cash flow. Yes, now we will do the modification adjustment. I will draw two columns here. You should understand the difference why this problem we are doing like this, previous problem, because both are different there. What is my, I'll write ROU, lease liability. What is my pre-modification balance? $367,950 and 21,090. Okay, now how much my ROU reduction happen? Can you tell me? Can you guess, students? Please pause the video and just give it a guess now. I have to deduct now something. How much ROU reduction must have happened? You give it a guess, we'll compare the answers. Yeah, I'm sorry students, one small change. It is not ROU reduction, because ROU reduction is the balancing figure. No. New ROU balance. See, if you deduct ROU reduction, I'll get new ROU balance here. So, you understood, no? New ROU balance how much? Or, if I deduct this, I'll get the ROU reduction. You can tell me any figure. You can tell me ROU reduction figure. Then, ROU new balance is the balancing figure. Or, you tell me what should be the new ROU balance, so that ROU reduction is the balancing figure. Question is clear? Any one number you can tell me. 2 lakh, 2.75. What is 2.75? Reduction, new balance. New balance. New balance is 2.75. That means reduction is how much? 3.67 minus 2.75. You are telling me you are going to credit ROU with 0.92. What is my accounting entry? 2 ROU should come now for proportionate reduction in the time. What is the entry I am going to price? Proportion reduction should happen. My entry will be lease liability account debit 2 ROU. What is that 2 ROU I should do? Previously you did 50% of the opening balance. 0.92. Yes, others? Do you have any other number with you? On what basis you can do it? Huh? Revised depreciation, okay. Or can I consider based on the life? Okay. Now, you have got 3,67,950 into how many years are going to balance now? 3 years divided by 5 years. How much remaining? See, this 3,65,950, 67,950 is meant for 5 more years. The life got reduced by 2 years. So, what is my balance for next 2 years? So that I will deduct it. This is depreciation per year, no. This is going forward balance now. 3,65,000 divided by 5 gives you going forward balance. So, you keep it only 2 years depreciation. Sorry, 3 years depreciation. Understood? So, this balance becomes 2,20,770. So, when the term reduces, understand, when the scope reduces, I will take the percentage. When the term reduces, I will reduce it by the number of life. How? I will see 3,67,000 is my balance right now. For how many years? 5 more years. Am I going to continue? No. So proportionately because it is SLM, no. We follow SLM method of depreciation. No? It's like an SLM. So how much every year depreciation I should charge? Divided by 5. So how many years I am going to give? 3 years. So 3 is the balance. Are you clear? So if this is the thing, 1,47,180 is what you are going to credit ROU. Yes, so you have got any doubt? Convinced, more importantly? If not convinced, you tell me which point you are. There is a new carrying. Because see, 3,67,000 when you said, how long this asset is going to come to you? 5 more years. But are you going to continue for 5 more years? No. You will not charge depreciation for 2 years because that year not there. So reduce proportionately, divided by 5 gives you every year depreciation or whatever. Into 3 more year balance you keep with you. Balance you write off. Because depreciation will come only for 3 years now. Cross multiplication. Yeah. 5 year work life is equal to 3.67. 3 is equal to how much? So 3.67 into 3 by 5. Yeah, please discuss. I can make out from your face somewhere. I can try to make out if you are not convinced. So I wish you raise that. Discuss, because see, if you see procedural thing, I am avoiding time there. I am not going to, you would say do it at home. Not interested at all. Conceptual, I would love to discuss. I want to explore more. Yes, now comes one more less. What is my remaining lease liability balance? For this portion, because I have to give a debit to this lease liability, no. Previously, it was for 5, this is for 5 years. Will I do into 3 by 5? That is not possible, no, because I am prepared to prepare an amortization schedule there. Understood? So, what is my remaining lease liability balance? Previously, when the scope got reduced into 50%, I did. But I showed you also, alternative to doing 50%, you can do one more thing. Find out the present value of the future cash flows. That itself is your lease liability balance. So how much future cash flows are there? 1 lakh is there. How many years? 3 more years. At 6% original rate. Because you don't want to mix anything else there. Not the revised rate. Will give you 2,67,000, 1,50,000. Understood the difference, understood the adjustment, and the difference is 6610 is a gain on modification. If you wanted me to do this way only for previous two problems, I could have done it. 25, 25, 25 for next 5 years into its present value factor, the original EIR. I'll get the same. Instead, into 50% also I'll get the same. That I showed you in one PPT, one slide, Excel working. So if you are not much clear, I already shared the PDF with you. At home, please go through and see how this working is different from the previous working. If you wish, the previous working also you can do it this way. But this working you cannot do it like a previous way. 7%, because if you bring 7% into picture there, that means you are like a remeasurement also you are bringing, no. See what you are assuming, only my life got reduced, keeping all other conditions same. In the first question, from 50 to 30,000 it came. You took 50, you took 25,000, I told you, keep price 25 only. Like this, if I have to look into the proportionate reduction, I have to take original EIR only, no. Because this is with 6%. What gets reduced is 2 years for 6%. Now, simple. Pass the journal entry, lease liability to ROU to gain on modification. Should I do remeasurement now? Yes. Now that remeasurement is at 7%. But for 1,50,000, not 1 lakh. Because when you did remeasurement, you end up paying 1,50,000 rupees. What? When the term got reduced only for the previous. So the remeasurement adjustment is going to come from 1,50,000 because you mixed both together. No. So I'll run. We'll do the remeasurement. What is my modified lease liability on remeasurement together? 1,50,000 into the present value factor for 7%. That's why we separated both. We said term is first, consideration is second. And my adjustment, whether the consideration changes on its standalone basis or consideration changes because of the increase in the quantity, what is my journal entry in both the scenario? My quantity remains same, consideration change. Have you done that problem? Quantity remains same, consideration change. Have you done that problem? From 1 lakh to 95,000 change. That problem is same, no. Where quantity same, consideration changed. So your quantity increase, consideration change. Same. So that's why we mix it together 1,50,000 and take 7%. Please solve this today. At home, please go through this. Highly probable exam questions. And I can say somewhere very important part of your lease account. After going there, this looks tricky, no? That looks simple initial days. Now we will come across sale and lease back. Then you say, sir, my modification is far better. Then we'll compare and go to the next standard. You say, sir, 116 is better. So it will move on like that, okay? When you do for the first time, it looks difficult. What is my current balance? 2,67,300. So remeasurement adjustment will be 1,26,300. For this, what accounting entry I'll pass? Yeah, we can pass an adjustment entry together. Rather, we'll pass a separate entry, no, because ultimately, because then you are trying to tell me giving the net effect. But because of the term reduction, ROU asset comes down. Because of the quantity increases, ROU asset goes up. Somebody looks at my journal entry and seeing the net effect, they will get confused. Now, what happened exactly? That's why in all the question I said this is important. Any doubts we can discuss? I'm still open. Yes, students. So please pause the video and calculate the revised depreciation for next 3 more years. Okay, students. So now we'll check the answers for the annual depreciation. So my WDV at the beginning of the 6th year is how much? 367,950. You fast see there were 2 adjustments to this. One term adjustment, another consideration adjustment. We always give the term adjustment first. How? By the proportionate reduction. If it is the quantity reduction, 50, 40%, whatever. If it is the term reduction, proportionate year-wise reduction. Now then the consideration adjustment comes as a remeasurement. So my modification adjustment is 1,47,180. Remeasurement adjustment, modification adjustment is going to reduce the consideration. Remeasurement is going to increase that. Now I'm going to get the book value of 3,47,070, which should be depreciated over next 3 years as one single lease contract. Even though there is a second lease contract, physically there are 2 papers, but for my accounting purpose it is 1 paper because the second increase addition is not in line with the market price. If it was 2 paper, 2 different contracts, no headache. So many complications. No? Again, I will go tell them management, just don't mix things. If you don't mix things, you don't need us. Any BCom graduate also can do this. Anybody can understand it. You mix it, we come into picture with Ind AS. People will not understand it, what you are doing. Then we have to explain them. Look, sir, this is what they have done. All happened because of the mixture, no. Otherwise, tell no, you that 1,500 additional you took, take it a market rate, finish. Then why we have to do all this headache? Where the remeasurement adjustment is going to come into picture? Okay, we have to prepare a modified lease schedule. Okay, you can leave some space. Students, you can pause the video and do this. I start with this opening balance. Now, question is very silent. Then why we are doing it? Probably in the exam they may ask you. Account till end. Followed, no? Question is very silent here. In none of the previous question we have done this. So going forward, 3,93,000 will be amortized over at 7% with 1,50,000 for 3. Balance is becoming 0. You can leave some space, students. Online students, you can pause the video and do this. Then ROU asset also 3,47,000 is my opening balance. Depreciation will be charged for next 3 years. Balance is going to become 0. And why we are doing this for specifically this problem? Because in exam they may ask me account till end. Whatever, I don't know. This question has not yet come for the exam till now. That's why I cannot tell you no, how it is going to come. So when you talk about modification, term modification, quantity modification, you have seen quantity modification goes with the percentage, term modification goes with the life. When you talk about percentage modification, ROU asset you can apply, lease liability apply, doesn't matter. But when you talk about life, proportionate life reduction, I cannot apply, I can apply only for ROU. For lease liability, always present value of the future cash flows as per original terms, at original EIR. In fact, this also instead of doing percentage, I could have worked out. This is a shortcut I used in my previous 2 questions. Just a shortcut. Otherwise, same method I could have used there also. Now, I will show you ICA problem for remeasurement. Because mine is one more shortcut I told you, and I will tell you my shortcut at the end. My shortcut is when we calculated remeasurement, how much we took? 1,50,000 we took. But in 1,50,000 there is some 2 mixture, no? 1,00,000 for the new property, 50,000 whatever, there is a mixture. So what ICA has done, they said remeasurement due to change in the discount rate. That means I will continue with the same 1,00,000 for next 3 years. Previous balance I restated at what rate? 6%. You asked me why is 6%? 7%. And the new previous book value was at 6%. This is at 7%. I get 4,900. I'll pass one remeasurement entry, lease liability to ROU asset. This is what they have done in the study material. Then you added one new quantity. The value of that quantity is how much? 50,000 into 7%, 1,31,000. You passed one more entry, ROS quantity to lease liability. If you see this entry and the previous entry taken together, net effect is what I have given to you. So if you are okay, in your practice you are okay, I suggest please split that. What I have given you 1,50,000, remeasurement I have given 1,50,000, no? If possible, split that and pass two entry, 1 lakh, do the remeasurement and give 4,900 and give that 7 lakh, 1,30,000. Short of time, sir, it is difficult, confusing. You follow my method, you risk 1 or 2 marks. But okay, I am say worth risking that much mark, because my working will be faster. Are you clear why we have to see? And see, whenever I significantly differ, small minor here and there, I will differ from institute. Because if I start teaching you in the ICA way, then you will have so much, you will end up with so much confusion. That's why I have differed. But these are all the places where I have significantly differed from ICA. So again, I suggest you please check my solution with the ICA solution. Get yourself confidence. That's very important. And understand why I differed it. I have applied my mind, consciously taking risk. So this will be my scheme of entries of ICI. My entry is this. If you see, net effect is same of remeasurement. Yes, with this we are totally complete with the lessee form of accounting. In lessee, we have got normal, we have got remeasurement, we have got modification. Other than that, we don't have anything at this point of time. No other headache. So now we can check into the lessors account. And two more aspects, transition, one problem, one or two.